Hello guys, welcome back, and it's Wednesday. The week is not flying, I wouldn't say that, but it's going pretty quick. And we are very close for the last week of November. Next week it's going to be the last week of November, and then we are in December. And from December to January is just, a blink of eyes, and we will be on Trump. We're going to be with Trump on power on USA. So if you haven't yet watched the video from yesterday, I've talked about the Europe CPI, and we have the results today. So we had the release from Eurozone CPI yesterday at 9 p.m. But before I go into the numbers, please hit that like button right there, click and subscribe, and share this content with your friends, and make sure to register for the webinar today. Yes, today we have webinar. It's new, it's Wednesday. So there is some nice things happening on Wednesday webinar. I'm trading live with everyone. Okay, so I'm actually picking the trade that I want based on a strategy that I've presented to everyone last Wednesday. So if you haven't been on last Wednesday webinar, you can watch the replay of the webinar on the ACY Securities YouTube channel. All right. So before we go to the 5 to 6 p.m. webinar today, watch it up. The video from last week, the replay from last week. So now, getting into the numbers from the CPI last night. At 9 p.m. we had the Europe CPI year over year came in as expected at 2%. From October last year 2023 to October this year 2024. Then we had the core CPI year over year from October to October, and we had at 2.7% from the consensus at 2.7%, and the previous 2.7% as well. So literally no changes, nothing. The CPI month over month came in as consensus was expecting at 0.3% and higher than the previous. Previous was at negative 0.1%, and now it's actually on 0.3%. So we do have some sort of uptick on the inflation. And if we look to the euro-dollar chart, trading right now at 105.90 at this moment, we can see that from the release, we've touched on the 106 level and we've dropped it. But then later on, we've recovered all of that, and now we're trading back to pretty much 106, 104, 105.9. Now, the inflation is coming down, okay? I do believe that inflation is coming down on Europe. And there's no big reason why it wouldn't be coming down, all right? The central bank, Lagarde, it's more into a dovish rhetoric, neutral to dovish rhetoric, okay? It is analyzing meeting by meeting, but it's more into a, okay, we have inflation coming down, we know this is going lower, I think we can continue to lower the interest rates, all right? This is pretty much what she's saying. And this is weakening the euro, all right? Now, that being said, based on what we have right now, what are the next opportunities for the market? What can we trade, right? So today we have CPI from UK, CPI over year, as well as CPI month over month, and we have the PPI input month over month as well, and German PPI as well. So for CPI year over year from UK, we're expecting at 2.2% from the previous of 1.7%. The CPI month over month has no expectations yet, but the previous was 0%. Most likely we will have some sort of increase. The PPI is expected to have an increase as well from negative 1% previously, now to consensus at 0.5%. This is leading to us into a very simple trade. If we had the release yesterday from Europe, and we know that the inflation is actually coming down, that means that the currency is depreciating because the central bank will continue to reduce the 25 basis points in the next month, meaning that if the CPI for today from the GBP comes in higher than expected, most likely we can have a short trade on euro pound because we know that euro is very weak and we know that the pound will be very strong. And the Bank of England is somewhat, yes, reducing the rates, but it's more hawkish than the ECB. So that means that we can play around with these swap rates, okay? The spreads between the rates from one central bank to another. Meaning that, yes, we can put it down the euro dollar, sorry, the euro, compare it to the pound, euro is weaker, so we can short the euro pound. Now, that being said, things will actually get more busier and busier tomorrow and Friday. Okay, so tomorrow economic calendar, we have a lot of speeches. We have a speech from Lagarde at midnight. We have a speech from I can't pronounce his name, Ramsden from UK. Speech from Bowman of USA, and Guindos as well from Europe. And then on Friday, it's where we're going to get some PMIs, we're going to get some really good data. Now, not much geopolitical tensions happening around the world, but I mean, how many times have we seen that already? Okay, so it's not because they say that this will do. Nuclear bombs is something that if you stop just for a second and think about it, if they do it, they die, all right? And they don't want to die, right? They pretty much, depending how big the nuclear bomb is, it can collapse the whole world. And I don't think that humans are so dumb at the point of killing each other and killing itself just to prove to someone that you are better than them. You don't need to do that, right? You can resolve things on other ways. So yes, this will bring some volatility to the market. You know, most likely we're going to have some sort of momentum into some pairs like US dollar as well, Japanese yen, from the comments of weather Monday. We had some very soft comments. I've talked about that yesterday on my webinar. So if you haven't watched it yet, it's on the replay. But I want to bring something really interesting after elections. So I've separated here some things from election. Some results of the market before election and now after election. So returns since election have been Dogecoin is up 141%, MicroStrategy is up 87%, Coinbase is up 67%, Tesla is up 36%, Bitcoin is up 35%, banks stocks are up 8.7%, US dollar has been gaining strength around 2.3 to 3%, 2.9 to 3%. Small caps and S&P 500 around 2.5%. Now, this is more the risk side of things, okay? So that means that, yes, people are buying it, right? Because if it's going up, people are buying, right? Now, let's look at some conservative sort of investments. Long-term treasuries is negative, down 2%. International stocks is down 3%. Oil is down 3%. Gold is down 4%. China is down 7%, Novo Nordisk is down 7% as well, Pfizer is down nearly 10%, Trump media is down 11%, and volatility has been down 21%. So that means volatility is down, high risk stocks are up, low risk stocks are down, high risk class of assets are up, low risk class assets are down. That means that the market is risk on. Okay, this is here. You can check by yourself, right? So there is plenty of opportunities happening around the market at the moment. So hopefully I can see you tonight on the webinar. So again, if you haven't yet registered yourself, do it. It's free. We don't try to do anything. We don't ask for credit card. We don't ask for anything besides your email. So we can send you the link. We can send you the link to your email so you can join us. So go into the description of the video and register yourself now. I will see you guys tonight, or I'll see you in the next video. Have a great week ahead, and hopefully we can make some good trades. See you guys. Bye.